deVere Group is one of the world's leading independent financial advisory organizations with more than $10 billion under advice from over 80,000 clients in 100 countries. But it also comes under a great deal of scrutiny from regulatory bodies and in the media. It's faced allegations of malpractice and mis-selling and run-ins with regulators. Today, joining me here in London is the CEO of deVere Group, Nigel Green, to talk about the business, its challenges, and his vision for the future. Nigel, welcome.
Thank you.
Let's go back to the beginning, though, before we talk about the future. deVere started when and how? Why did you want to start a company like this?
2002 is when the company started, and I had a vision that there would be more and more expatriates around the world. I could see the world becoming more global, more free movement of people. And I realized there was a niche where expatriates in particular needed good financial advice.
Let me try and understand the margin of difference, though. If that person who had, let's say, emigrated to Hong Kong was setting up life there, but they'd built up a portfolio of investments, a pension fund in the UK.
Yes.
Is there really that much difference from leaving that fund in the UK to investing it somewhere else?
We'd look at their pension, but it'd only be a small part of their financial planning, in fairness. Rules have changed even in the last 2 years, but if you go back 18 months, then you could actually move your money to a different European jurisdiction, which could offer less or better tax incentives than leaving it in the UK. So European law, freedom of movement of employment, freedom of movement of your pension. So, yeah, we'd sit down with a client and we'd look at their individual situation and help them maximize their returns, but also look at the areas where perhaps they could mitigate tax. And you have to be careful how you say taxation, because you know, avoidance.
Mitigating tax. Can
yeah,
be avoidance.
Avoidance might be wrong. Okay, mitigation's okay, but even avoidance, you know, what does that rule mean? I mean, you can.
Well, seeing as you've mentioned, avoidance is always wrong, isn't it?
Avoidance is wrong to some extent. In so
Why
much
only
as
some?
Well, you know, you leave the UK and you can visit a VAT-free shopping centre, right? It's tax-free. You're avoiding tax, right? So within certain rules, if you stick within the rules, then you call that mitigation, you call that avoidance. You've obviously got to stay within the rules, but there are rules which you can apply to yourself, which mean that you perhaps would pay less tax than you would otherwise do so.
And that's the sort of expertise that your company offers? Knowing those rules, knowing how to apply them?
Yes, that's correct. And you can imagine that's complex because not only you're dealing with Brits, but you're dealing with Germans, you're dealing with French and Canadians and Americans, and they've all got different tax rules. And you've either got to be up to date or you've got to be able to have the ability to find the information nice and quickly and precisely.
And the situation is fluid, isn't it? Because each of those jurisdictions might introduce a change in the way they're going to tax funds, be it of expats or others. And then what looked like a good investment on Tuesday, by Friday, is a really bad return. Yes, although it's in general not as dramatic as you indicated there. Most rules are not retrospective. So if you've moved something today, in general, most governments don't say that things you've already done are disallowed. Yeah. Okay, obviously there are things that are actually legal, and people in the UK in particular have put things into the film industry. And you could actually argue, is it legal or is it, is it against the law? Well, technically it might have been within the law, but it was tax avoidance. So morally it was wrong, and they were not within the spirit of the law. Okay, and that's me being generous to the people that have and there are cases
used those schemes.
There are cases going through the UK courts now about that, aren't there?
There
are. People are being asked to repay large amounts of money. Yes. Okay. We don't deal with the controversial ones. You'll be pleased to know. So we'll look at more trust structures. We'll look at pensions. We'll look at things where governments have genuinely incentivized people to save in particular ways. And pensions, you mentioned yourself, is a way where many governments around the world have said people need pensions, and they've therefore given tax incentives for people to put their money into those
I call them tax shelters. And I'm a big believer in pensions. I don't think people realise how important they are. So actually using those for the purpose for which they've intended a pension, then I think is very good advice.
Would you, though, advise a mixed investment portfolio for somebody, you know, getting towards my age of 50s, 60s or something, rather than just a pension? Is a pension a rather old-fashioned idea on its own?
Yeah, pensions can be, and it also can be a negative word, can't it? Pension. Nobody wants to be a pensioner. So
I'm quite looking forward to it.
Are you? Okay. Well, you're looking forward to the option not to work. I think that's the good word. And I think most people look forward to the option not to work, but don't really want to be old and poor. So how do you make sure that you maximise your money? Because it's quite worrying, right? Today's world, is your government going to look after you? You know, I'm not criticising the UK government, I'm talking about any government. Are they going to look after you? And really, are your company going to look after you? Maybe, maybe not. And we've seen all sorts of companies fold, particularly in the UK, and pensions therefore perhaps reduced because the company's not around anymore. I think in these days people have to realise that they need to look after themselves.
Yes. Well, a pension pot used to be a cast iron guarantee. The idea of the company going bust and having no money was a rarity.
Yep.
It's becoming increasingly common, isn't it, now? Let me ask you about something that the Tory government did recently, which is to give people more freedom what to do with their pension pot. It used to be you get to retirement age, you buy an annuity. If the interest rates are rubbish, tough luck, pal. That's what you've got for the rest of your life. Now we've got freedom to make decisions. Yep. Was that a good move, do you think?
I don't think it was. I think it's gone a stage too far.
Too much freedom?
Too much freedom.
Tell me why.
Well, because you've got to 55 years of age, 60 years of age, and you don't know how long you're going to live. You don't know what circumstances you're going to have in the future. So therefore, the idea of having a pension, whether it's an annuity or a different income-bearing instrument, is arguable. But I believe people need pensions.
How do you encourage people? How do you set your stall that you are an authority then that would not advise someone to invest in something that will fail? Because surely the whole point of financial markets is there is an element of risk. There is an element of gamble about it all. How do you reconcile those two positions? Being totally safe on one hand, looking after your old age, and on the other hand, why don't we have a little punt on this? See what return we can get.
We look at diversification. So you're right, if we put all our money into one share, one asset class, then we're increasing the risk. But if you actually use products that give the opportunity to the client to use multi-assets and a spread, then history shows that you'll make a 6-7% consistently. And as a company, we would recommend people go to diversification, and they have their money managed by the top professionals. Keep the charges down, always look to reduce charges, but at the same time make sure they've got diversification so their money's not all tied up in one area. So certainly in the last few years, the world has moved more and more to being able to actually produce low charge structures. And I've been an advocate of that. I've pushed hard on making sure charges are reduced. Today, if you're going to invest in America, you may not invest in a fund. So let me just explain that, if I may. So if you invest in a fund, it's going to try and manage your money to try and beat the market. Unfortunately, 80% of funds don't beat the market, but they're going to charge you 1% to try and beat the market. Okay, well, actually, you can buy an ETF, which is going to cost you 0.2, 0.3, which is going to match the market. So
an ETF, just explain that for us.
Okay, an ETF is an index. So you're buying the index. So rather than have a manager that's going to pick stock, you're buying the index. So you're going to do whatever the index makes. So if you're aiming at America, where there's so many stock and so many managers trying to beat the market, you're actually better with an index. Now, let's reverse that, however, because that on its own is not enough. We talked about diversification. Yeah. If you're going to invest in technology, you wouldn't want an index because there's some big winners and there's actually some big losers. You'd want to have your money managed by a good fund manager that's able to look at the technology, look at the companies that are producing it, look at their profitability, and actually get a good return.
Do I need a fund manager? Just buy some Apple shares.
Apple is still that. I think that's increasing.
Fingers crossed?
Yeah, fingers crossed. Yeah, fingers crossed.
You don't have any faith in Apple shares?
I've got faith in Apple. I've got Apple.
Have you got some Apple shares?
I've got some Apple. No, I haven't got some Apple shares, but I've got some Apple products, that's for sure. I like Apple, but has Apple grown as much as Apple can grow? You know, there's a lot priced into the market because Apple is extremely popular. You know, they've looked at China and said, China's a great growth market. Well, in China, they copy everything. So is it? I was in China just a few weeks ago. They had an advert in the paper, copy iPhone.
Yeah.
Right? And you could advertise, you could buy a copy. I mean, you know, is Apple going to be successful in China?
But isn't the new middle class in China actually wanting the original? That actually the knockoff copy is no longer good enough for some Chinese?
For some Chinese, that's correct.
And that's where Apple are actually making inroads into the Chinese market.
It is, correct.
In fact, I think if in the last quarter, a lot of their growth came from the Chinese market.
Will that continue? That's the question. So if you think...
You're the financial expert
I'm the financial
here. Will it continue? You're sceptical.
I'm sceptical in so much as I think they've been massively successful. And if we go back in history, then there's always something that happens. You know, Nokia...
So they've peaked.
Nokia was...
I'm exploring this, Nigel, because, you know, I suppose I'm questioning... If I just want to invest in America and American stocks, I could just pick one or two stocks, couldn't I, that are proven to do pretty well. Why do I need your fund manager, or why do I need, you know, your sales team to help me do that diversification? Couldn't I just pick back a winning horse and use that instead? You
could attempt to do that, but it's very, very difficult to find that winning horse. If you had invested in Nokia when Nokia was at its peak and we were only going to have Nokias, where are they now?
Yeah.
So diversification is important, and you never know what the future is. There's always something that happens. No one's got a crystal ball. So reality is, what we think is going to happen in the future is priced into the stock. So what we think is going to happen into Apple is priced in. Yes. It's what we don't know. Are they going to get a massive surprise to the upside? If they do, great, it's good for Apple. If they get a surprise to the downside, it's bad for Apple. So we believe in diversification. We believe that even if you think Apple's good, don't just invest in Apple. Actually make sure you've got a spread of investment. Now, on that spread of investment, you just offered a new product to your clients, which is investment in cryptocurrencies. Correct. I was quite surprised that you did that, because in all the interviews I've done so far about cryptocurrencies, clearly I've been talking to the wrong people. They all say this, particularly Bitcoin, I suppose we're talking about here, Ponzi scheme, it's based on nothing, it's targeted on nothing, it's a complete house of cards. One puff of wind and the whole thing will blow down. And in fact, we saw some dramatic falls in the value of Bitcoin only in the last couple of months. Why are you going into cryptocurrencies? Because I believe personally that there will be a digital currency in the future that will be successful. And I think that in today's world, it's crazy to ignore the opportunity of crypto. Now, do I believe that it should be a very small percentage of your portfolio? Absolutely. But I think just to ignore it and dismiss it is crazy. I mean, we've seen, and people say blockchain's incredible, but I don't trust crypto. Okay, well, if blockchain is successful, then you're going to need digital currencies. And in my pocket, maybe yours, you've got dirty, horrible, germy money. Is that going to be around in 10 years' time? Okay, well, maybe we'll look back and go, no, right, can you believe, people didn't believe in crypto? Let's separate the two out, because, and this is my experience so far of reporting on these things. Blockchain is here to stay. It's a very clever distributed ledger technology, which will find hundreds of applications. Whether a digital currency built on blockchain, and Bitcoin was the first and the most famous, will survive, because people's faith in it will survive, I think is still open to question, don't you? I agree, it is open to question. Okay, but can I take that point, because it's a really good point. We're talking about an economy of trust, right? So there's three things for me. One is it an alternative currency? Well, okay, maybe, all right? And we've always had bartering, we've always had a system of payments. Is it a store of value? Okay, well, store of value, property, gold, store of value, questionable. Economy of trust. in my opinion, not questionable. So, you know, today's world, we look at Amazon, we buy on Amazon, we look at how many stars something's got. It's an economy of trust, but it's also an economy of distrust. And there's also people around the world that don't trust their own government. Okay, we only have to go to America and see that 55% of people don't trust Donald Trump.
There may be other reasons.
There may be other reasons. 10% of people in America trust Congress. Only 10%. And that's the best in the world. So imagine you're in Venezuela. Do you trust your government? If you're in Africa, do you trust your government? If you're in China, do you trust your government? Or would you like an alternative? So you're absolutely right. It's about trust. And there are people that trust technology. And they trust it more than they trust their own government. So they're looking for an alternative. And you can say there's nothing behind it, but there's incredible technology behind it.
Oh, the technology's there.
It's fast.
But I mean, aren't I thinking that normally currencies are tied to a gold standard, they're tied to a government bond, you know, that there is something there. I know I'm being terribly old-fashioned here, but there's something of measurable value supporting the currency.
Yes. So let's go
supporting Bitcoin.
Let's go to America. That's the biggest and the strongest currency in the world. So America, you're saying it's a promise from the government. Okay, but the American economy is 23 trillion in debt.
Yeah.
So the money says, in God we trust. Okay, but we're actually going, the dollar's fantastic because we trust the American government to back it. But they also print lots more money.
They print money and they borrow from the Chinese.
And they borrow from the Chinese. Do we need an alternative? In my opinion, we need an alternative. So is it going to be Bitcoin? Is it going to be Ethereum? Is it going to be something else? Okay, I think we watch and wait with interest. But to ignore it, okay, that's wrong. To say it's a con, that's wrong. To say that there's going to be something there, I think, and therefore analyse it and keep looking at it, then I personally think that's sensible.
Bitcoin has got a reputational problem as well because it's largely associated with the underworld.
Indeed.
Drug money.
Yes.
Black economies.
Yes.
Do you not think that's a problem?
It is a problem, and at some point there's going to be regulation. So if I'm
right, think there will be.
Yeah, there has to be. And when there's regulation, does all that money go? And where does it go, right? So yes, I think there has to be. But
that regulation, you think, would presage more consumers coming on board because the confidence would go back.
Correct. But then some of the money's going out because the criminal money's going out. So does that mean the price goes down? Maybe. But actually, I think there's going to be a gradual acceptance of some form of digital currency.
But in that, we mentioned earlier about your expertise in something of a gambler, choosing a winning horse. Your sense is there's something in this crypto, and you're there for, is it there for the long term, or are you just in to make a quick buck and then get out when it all collapses?
No, my business is long term, so we only make money by looking after clients over a long period of time and those clients referring us. One of the things that I've done is I've hired one of the top guys in the blockchain industry. Got a team of 10 people that are analysing how we can use blockchain from a company point of view to help us be more effective, but also looking at the various coins and looking at the technology behind them. And therefore looking at the future to be able to give that information to clients.
Do you have a hunch of which one's going to be dominant?
No.
I mean, the Ethereum is getting a lot better press, don't you think, right now?
Yeah,
Bitcoin?
Ethereum's got better technology and it's more scalable. So logically, it should be that Ethereum wins, but we go, you know, Betamax and VHS. Sorry, I'm showing my age. Everybody said.
Well,
that,
which one's which?
Well, yeah. Well,
Betamax was thought the better technology,
correct.
But lost. Is that the
exactly?
You're making that reference.
Yeah,
okay.
yeah. VHS was the inferior one, but won.
Yeah. And that could happen in this area too.
Of course, yeah, I think so. But I do agree with it was your point. In fairness, trust is the key.
And do you think governments are looking? What's your sense of how much the regulators are having a look at the crypto? Because it seems it's marching on, isn't it? Like all things digital, it's there, it's out there.
Yeah, correct.
And the ability for direct to consumers, direct to business people to invest or not without much government oversight. Is that changing now? Do you think that territories around the world are having a closer look at this?
Yes, they are. And it all flows through an exchange. So they've only got to regulate an exchange and they've actually got some form of control. So, you know, if you want to change your money over from one crypto to another, or you want to cash out, okay, then you've got to go through something that has some form of regulation. But that's going to increase, right, dramatically, all right, dramatically, because regulators are looking. I think the big one, I think that it's not the currencies that's the problem. I think it's the new coins that's the biggest issue. So
tell me about those.
Well, you have an initial coin offering. So somebody can go, we want a new coin, and therefore they can invent one. They can use some form of the technology that's out there today and raise millions because they believe, or they make people believe, that that coin's going to be massively successful.
That's just a Ponzi scheme, isn't it? It's pyramid selling. It's built on nothing.
Yeah, call it what you will, but it's definitely a fake.
So why are you going anywhere near it, Nigel? Why aren't you keeping your clients a million miles away from this stuff?
I'm keeping them a million miles away from the fake coins. Right? And I think they need advice, right? So again, a lot of financial advisors are going, ignore it. I don't think you can ignore it. You know, I was in Shanghai recently, and I mentioned it because I was talking about the iPhone earlier on. And whilst I was in the airport lounge, I was talking to somebody about crypto that was in Africa, in fairness. And once I finished the call, a Chinese guy came up to me, and he said, all right, can I ask you about crypto? All right, so I'm in a business airport in Shanghai airport. And good conversation. I then turned to him and said, what percentage of your portfolio, just out of interest, is in crypto? He said, 40%.
Blimey.
Right. I'm like, okay, that's crazy. Now, he needs a financial advisor.
Yeah.
Because he might be right, he might be wrong, but that's crazy to have that much of your money in one. All right, and is it an asset class? Alternative currency, yes. All right, asset class, don't know. All right, 1% maybe. Okay, 5% maybe, but not.
Which comes to a very interesting area. So let's say he was a customer of yours. Would you refuse to, and any of your employees operating with you, would you refuse to allow a customer to invest so foolishly by putting too much in a risky market?
Yes, I would.
Or do you do what the customers want you to do, even if they're daft?
I think 10 years ago, do you know something, we'd have actually, a client said, I want to go into nuclear power. And you know, saying even though we would try to persuade them out, we probably would have let them 10 years ago.
But not now?
Not now.
Why the change?
Those clients came back and they blamed us. And today regulators actually blame you as well. So it was the clients first, but that kind of made me think. So now you will get clients, and sometimes they're sophisticated investors. So they'll go, I know the market, I want to do this.
Well, then why are you coming to you in the first place? Let them get on with it.
Because they need an instrument. They still need a platform. They need something to be able to buy that particular vehicle. Right. It's like you saying, you know, buy Apple shares. Okay, well, client says they want all their life savings in Apple shares. Okay, I don't want them as a client because they're going to blame me if it goes wrong.
So you have parameters now, quite certain parameters.
Correct.
And you teach all your staff that, you know, there's, what would you call it, an ethical dimension, a moral dimension to investment here.
Correct.
And you will not allow them to do something which your intelligence tells you is foolish.
I'll refuse the business.
You'd rather refuse the business?
Yes.
Okay. And the reason for that being you'd rather have slightly more modest gains, slightly more modest successes than have the risk of something really, really risky investment and it goes wrong.
Correct.
And then you get the blame.
I get the blame. I don't want that. I want a diversified investment for our clients.
You alluded to the fact that was a problem earlier on. Do you think you've made that mistake?
Yeah, I've made that mistake.
In the past?
Yeah, for sure. Yeah, I can think of one client in South Africa that actually chose everything and then came back and blamed us. Well,
if you let him, I suppose it was your fault, wasn't it?
Yeah, you could argue. It's a pension, so why did you let him? 10 years ago we did, yeah. Yeah. We shouldn't have done. So but it's quite hard with a client, right? A client goes, I want this, I know. Should you let them? Okay, we don't now.
You've had to change your operating practices as a result of that experience.
Correct. And we're back to the pension. We're back to the government. The government allows people to go spend their money and do what they like with it. Same thing with pensions. We're now saying, actually, you might think that this is going to be the future, but don't put your life savings in it. We won't let you. If you want that type of investment, go see another broker, not us.
Right. Tell me about your recruitment process. How do you get, you need a fair number of young people to come and join the company from time to time, no doubt. How do you find them?
I like young people, so I'm a fan. I prefer to take on people that I can train and can develop. So I'm not ageist, so I don't go the other way either. But I certainly don't ever go, you're too young. If you're good enough, you're good enough.
What skills do you need in a recruit?
You need them to be able to develop communication skills. They need to have technical knowledge. So you've got to be able to communicate what is perhaps a sophisticated product to a client and make it simple, or you at least make sure the client can understand it. So they've got to have technical knowledge, they've got to have communication skills, and they've got to have the ability to market. They've got to have the ability to get recommended to other clients, to actually find other people they can talk to. So unusual skills to have as a combination.
Would you put the sales technique at the top of the queue there?
10 years ago, and now I'd put the technical knowledge. So I think there was a stage where you needed to be very, very good at communication because people hadn't heard of particular products.
That's a euphemism for a hard sell, isn't it, Nigel?
No, that's not. No, it's communication skills. You need to be able to explain things to people in simple terms. That doesn't mean, I don't think people buy it. I don't think people take a hard.
The antithesis of the client you talked about who knows what they want to do and demands that you invest and do what you're told
Today's world.
Is the naive client who thinks you're going to look after them and gets persuaded to do X, Y, or Z, and it all goes wrong, and they feel they've been let down by the very advice they came to your company to provide.
No, the guy that thinks he knows what he's doing is usually somebody that has a little bit of knowledge.
That's often a dangerous thing, right?
It's a dangerous thing. So it's not the naive client. It's one that has a little bit and therefore thinks they know the market, thinks they know what's going to happen. That's a dangerous client.
I'm trying to assess, though, to what extent does knowing the market turn into the hard sell, where people are persuaded by good communication skills, as you call it.
Sure. Sales
patter. Bit of mild bullying, maybe. Do you think you've ever been guilty of that as a company?
No, I don't think we have. Certainly we've trained very strongly that you ask good questions, you find out what a client really wants. And we've always applied various principles that apply worldwide, which would be if you wouldn't do it for your mum, your dad, for your brother, for your children, then you shouldn't be doing it. So always give best advice. It's a long-term business. Yeah. And I also believe that, a hard sell, does that really work in today's world? I actually think people back away from people that push. They like people that explain things clearly and allow them to make their own educated decisions. Mm.
You'll be aware there's quite a few former employees of deVere who disagree with you about that. They feel that they were schooled in a hard sell, quite ruthless organisation where the only thing that mattered was getting the sale. How do you respond to those kind of criticisms?
You get all sorts of things on the internet, don't you? And that's what you're referring to. It's not been something that people have said to me directly, but they've certainly written it on the internet. And the internet's, interesting. It's like a graffiti wall, isn't it? You can write what you like on there. Certainly when people leave the company, they're not always positive. And maybe I think
that would happen in any company. I don't think that in itself is extraordinary. But I mean,
I'll accept some blame there as well, because I think,
Do you think you recruited the wrong person?
I think I've either recruited the wrong person, and I think also sometimes when people have left, perhaps we haven't let them go gently. So I think that may be something of my personality that I've had to temper over the years. I'm a bit, you're either with me or you're against me, and that's not necessarily good. But I definitely think I've been guilty of that, and I've upset a few people when they've left. I also put it, perhaps I'm justifying it, but I actually, as a manager, give everything. So if somebody then walks away when I've really tried hard to help them, I do feel let down. And perhaps I've let people know that sometimes. I've upset some people when they've left, definitely.
I mean, you cut your teeth in the financial markets of a good few years ago now. It was a different culture then, wasn't it? It was very macho. It was either win, succeed, be rich, or fail. It was that dramatic, wasn't it?
It was that dramatic in the early days, yes, correct. You're making me sound old there, Martin. I felt it as you said it. But you're right, yes, it was to some extent.
Has that culture changed, do you think, over time?
Yes, it has, but I still think that's the same in business. You know, business and life is about succeeding. Success is building a good client bank and looking after those clients. So you've got to remember that the client is number one and good client outcomes is number one. So as long as you remember that and you constantly remind the guys of that, then the focus is the right focus.
Tell me the lessons learned from some of your other experiences. You were an investor in a pension company called STM.
I was, correct.
And then you pulled all your money out of it.
Yes, I did.
And you had clients of yours investing in STM.
Okay, so
that lines up. I'm trying to build a case of a conflict of interest.
Okay.
How do you plead? Guilty or not guilty?
Oh, definitely not guilty on that one.
Tell me why.
Yeah, okay. So STM is a provider of structures. So it provides a pension structure. Doesn't invest money.
Just help us understand that. What do you mean by pension structure?
So it's a trust.
Right.
So they're giving the contract, if you like, where the money sits under a contract. It sits under a trust. So they're not a fund manager like Goldman Sachs or GAM or Pacific. They're a provider of the structure that holds the money.
Yeah.
Okay. STM's an interesting one. If I go right back to the beginning to probably explain what happened with STM, I felt that the rules were going to change and that the rules were going to be more in favour of people moving their pensions to European jurisdictions. Yeah. So I decided to look for a good provider of European pensions. And I struggled. I made lots of phone calls. I remember one particular Friday afternoon I was phoning just to try and find a good provider, and I couldn't get anybody to answer the phone. You know, everyone had gone home, and it was
Friday afternoon.
Yeah, it was 3 o'clock. And eventually I decided that STM was the best of a bad bunch, and I decided to invest in STM on the basis that I would improve their infrastructure, improve their administration for our clients. I actually put staff in, so some of my staff went to work for STM to make sure that they had a good administration structure. And I also made sure that the cost for clients were dramatically reduced. So as part of the investment, I guaranteed that our clients were going to pay less than any other brokers. So anybody else using STM or any other trust, our clients were going to get the best. And STM reduced their charges by some £500, which was big in the marketplace. So I was able to give our clients good administration, good support, good products, and lower charges. So definitely not a conflict of interest. But
were you open with the clients that, why don't you invest in this company called STM? Oh, and by the way, I own a large chunk of it.
Sure. Yes, we have to.
You were upfront with that?
Yeah, absolutely, under regulations.
So they knew what they were getting into?
Yeah, clients preferred it because they knew that
Well, that could have been simple arithmetic, couldn't it?
Well, they knew that...
in terms, if you were undercutting the rest of the market by offering very good value and very low charges,
yes,
why wouldn't you jump in?
No, and also the fact that I was supporting it and putting money in, they felt was good.
Okay, so that was all good. So why did you then take your money out?
Because I said the investment was a short period of time, and therefore I took it out. And I actually received more complaints after I took the money out, severalfold. One, people complaining, why have you taken your money out? And two, the service actually, unfortunately, has gone down since I've taken my money out. It's a difficult one, isn't it? Because, you know, should you own something that's a provider? Well, if you look at Amazon, they own most of the things that they actually, you know, supply.
It's a sort of vertical integration you're thinking
about. It is a vertical integration.
But you haven't done that again since, have you? So do you think you got your fingers burnt doing that? It's not appropriate in the financial market. You're either an advisor, and all the other products which you talk about are over here, separate, or you're all part of the same thing. You're some kind of conglomerate. You haven't tried to recreate that experience again.
There are companies out there that do the whole structure. So if you take some...
advise and manage the fund
and actually have the whole thing.
You've chosen not to do that.
I've chosen not to do that. I quite like the freedom of independence. Yeah. Certainly to be able to use any fund manager, I like that. I didn't feel that actually having a trust company that I'd invested in was actually, pushing people in one direction. Yes, really it's about charges for that product, and I'd reduce those charges.
Yeah.
And let's remember...
So you weren't pushing it, but it was a hell of an incentive. It was a very big carrot, wasn't it?
It was a big incentive. Okay, and let's not forget 3 regulators actually approved the purchase. So it wasn't something that, you have to get it approved. Yeah. STM is in Gibraltar, Jersey and Malta. Each of those regulators approved the purchase. So, it was regulatory approved. We declared it to all clients, and clients gained from it. So conflict of interest? No, I don't think that was a conflict of interest. And there'll be some people within the company say, why don't you do that again? Actually, I think I want to concentrate on growing deVere. And we're also going in a slightly different direction with technology these days. So I'm tending to invest more in that, which again has the same objective, which is to increase the client experience and to reduce charges.
Let's talk about family life.
Yes.
Your dad was a preacher.
My dad was a preacher, correct.
Baptist preacher?
Baptist preacher, yeah.
What did you learn from him?
Be sure your sins will find you out. So yeah,
do you believe that?
I do believe that. I always believed that.
I'm sure it was drummed into you as a youngster.
It was drummed into me. Yeah, Baptist, as you may know, is quite strict. So we didn't have a TV in the house. That was the devil's box. So I was brought up with a strict number of principles. And
Are they staying with you?
They stayed with me, of course, yes. And yeah, my dad was my hero. So he died last year, sadly. But my hero, and yes, okay, his principles are in there very much in my mind.
You've now got a graduate program.
Correct.
Which you announced fairly recently. Why have you gone that particular route? What do you hope to achieve with the graduate program?
So I believe this business has become more technical. I mentioned it to you earlier on. And so therefore you need people who have the ability to learn, ability to study and develop within the business. It's tough, okay, financial services is tough. Most industries are tough. And there's a low percentage that actually succeed. If you're in America, they tell me it's 5% actually succeed. We look higher than that, but we're around 35% 3 years later have been successful in the financial services industry. So it's definitely not the sort of career that people should come into and think it's easy and glamorous. It's hard work. There's lots of learning to do. International financial services is an extra challenge because of all the different tax laws in different countries around the world.
Is it almost like you need to be a lawyer? Or something along the lines of that lawyer's mind for analysing government programmes and legislation and restrictions and all these kind of things. As we mentioned earlier in this conversation, it is ever more complicated, all that area.
It's ever more complicated. And there are not many people in my experience that are good at communication and technical. People that are extremely technical are often not great with communication. So actually to have the ability to be able to do both is unusual. So it's finding the right people, and those people being prepared to constantly learn and develop.
And of the young people that come up these days, I hear complaints from all sorts of parts of industry of a lack of resilience or a lack of determination amongst some of them. The snowflake generation is the derogatory term applied. Have you found that people actually expect to be able to make a living without much effort?
I've always found that with some people. They think the world owes them a living. But the reality is I find a lot of really good graduates that do have grit. And that's a word I like, by the way, grit. They did a study, and they looked at people leaving university 20 years ago in America, and they tried to find the common factor of people that were successful. And it was inversely proportional to their intelligence. Okay, which is quite interesting. So the most intelligent actually didn't succeed overall. And the only word they could use was grit, people that had grit. And I do find that when you find a good graduate, and any individual that's got grit, they're going to be successful.
How would you define that grit? How would you expand on that thought?
Grit's persistence, determination, the ability to see it through. We do live in a world of instant gratification. We want everything now. And grit is the ability to be able to do something today which you might not be rewarded for a while. Persistence, determination.
And do you think that's a learnable skill, or actually you need to pick out the ones who've got that innate grit in their personality?
I think that people can develop, so I believe in a growth mindset, but I'd like to see an element of that early on. So I'd rather have something there in the first place I can develop than zero. But I do think people can develop. I don't think you are what you are. I think you can develop, and I think all of us as individuals can develop. And we all need to be aware that the day we stop developing is the day we start to die. Use it or lose it. So that's sort of expression I use a lot. Use it or lose it. You've got intelligence, use it, grow, develop, and constantly look.
And is that down to the employee, or have you got on-job training programs these days to help people?
Yes, it's down to both, because you can train all day, but if somebody doesn't really want to learn and want to develop, then they're not going to do so.
That becomes obvious quite clear soon, doesn't it?
Super fast, yeah. And that's one of the mistakes I've made in business, is actually not realising quickly the wrong ones. So sometimes, you know...
What, you were too generous an employer at one time?
Yeah. People that are, below average, giving them too long. You can tell very, very quickly whether somebody actually has it. And to concentrate on your winners in business, I think is really, really important.
So are you upfront with people now when they say they want to join this business? You have to tell them that story, don't you? And say, of 35 people in this room, probably only 2 of you are going to succeed.
Yes.
Because that's the way it is. Are you that honest and frank with people?
Yes.
These days? And that's something that's changed over time?
That's changed over time, but I do think people, or the right people, appreciate it. The snowflakes, as you describe them, don't appreciate it.
And just go off and complain in a corner.
Correct.
Let's talk about the process of complaining and how you as a company, as you've grown in business and scope and your reach around the world, any company doing a business will have detractors. Do you think you were poor at dealing with detractors when you first started?
I think sometimes we were poor, sometimes we were good, but there have been occasions when we've not dealt with perhaps the detractors as quickly and as appropriately as perhaps we could have done.
What have you learned? What would you do differently nowadays?
I think that you need to investigate perhaps even more on the complaints than perhaps you did in the past. Today we phone every client that we take on, make sure they understand the charges, make sure they've received everything. We email them as well. So we go a lot further before we even take a client on now to make absolutely sure they totally understand exactly what they're doing.
Was that not always the case?
They always had
anybody who wanted phoned you up and said, I've got some money, you said, OK.
They had a brochure, they'd sign a contract, and when you actually take out an investment, you sign about 25 different pieces of paper, right? So sometimes there's too many pieces of paper.
That in itself is too complicated.
It is too complicated.
Opens the possibility of confusion,
correct.
Doesn't it?
It does, yeah. Regulations. So sometimes regulations don't go in the direction that they should do. So we go a stage further. Okay, not only do you have to go through the paperwork, but as a client, we'll also make a phone call, right? Back to the simple things, to go through it with the client, somebody else independently then advise them, and really make sure that they understand exactly what they've got. People do have selective memories, though, of course, as well. And you fast forward 5 years and people forget why they took out the investment. Yeah. And so therefore to have correct records in any market in the world is vital. And today's world, from a regulatory point of view and from a client point of view.
So you think the clarity now where your company is saying this is what we're going to do for you, and the client is aware, and the 2 of you have reached an agreement to establish a business relationship. That level of clarity now, would you say, is better than ever before?
It's better than ever before.
So here we are sitting 2018, you've got a long-term business. How do you think it's going to change over the next 5, 10 years?
I think it's going to change dramatically. So we're seeing in the industry technology coming in at quite a speed. And you've seen it, even in taxis, right? So I believe it's coming very, very quickly in our particular industry. So I see that we need to embrace that, and we need to use that to help clients reduce their charges and provide them with even better advice and better information.
Does that mean automation in terms of embracing AI, so that some of that advice which might have been in a tax advisor's head is somehow now in a computer algorithm?
I think that's going to happen ultimately, but do people trust artificial intelligence totally? You know, it's a bit like the car, isn't it? I travel around the world and I'll land in a country that I've never been to before, and then get in a car with a taxi driver I've never been or met before. That's crazy. But you asked me to go in a self-drive car, and I'm like, oh, hang on a second. So maybe we're not quite ready for a robot to give us the financial advice. But I think that we can move in the direction of automation. I think we can give a better service to clients using AI. And I also believe we can give better information to them about the decisions they're making using that artificial intelligence.
Commission that you charge or fees that you charge, it's easy to conflate the two because basically they're money I've got to pay you for your expertise.
Correct.
How do you make sure that they're always fair and competitive so that you offer a better deal than the next person?
Okay, so different countries have different interpretations of the word fee and commission. So that even adds to it. So you can imagine my job, we're in 70 different countries around the world.
And you've got to memorize 70 different
Well,
sets
I've got
of
to have
rules.
I've got to have an overview of each. So in some countries, we're paid an introductory fee, okay, by the life insurance company or by the fund manager that we use. And that would be a standard fee. So sometimes people say, you know, the fees are, you know, excessive. Well, actually, they're not the fees that we're charging. They're the fees that the
fund manager puts there.
Yeah, correct. They're there. It's a standard product.
And that's transparent. The client knows about it. Right?
Correct. Absolutely.
Okay.
And then in some markets, you charge a fee for the job that you do, and the client actually pays the fee. So it doesn't come out of the product. Okay, so I'll give you two different examples. In the UK, the fee is really not only transparent, but it's in your face because the client actually pays it out of his bank account or on his credit card.
And what about commissions? If you choose that fund manager A or fund manager B to work with, do we know exactly how much commission those two companies might pay you? Yes,
we have to be transparent, and every country around the world makes sure that that it's transparent. Again, it tends to be standard, so it's not different companies charge you different things. Everybody pays the same. And in general, those costs are written off over a period of time. So people talk about the fee, but actually that fee is over a period of time. It's not instant.
deVere has some rivals. There are other people out there who will give financial advice. What makes your company different?
deVere is different because it is truly global. Our clients are the same, they're global, they move, and we've got offices all over the world, so that makes us a big difference. We have cutting edge products. I believe in innovation. I'm always looking for something different, and as a company, our products certainly would be at the cutting edge of the marketplace. Because of the size of the company, we're able to negotiate better products for our clients on occasions, which we offer them, and that can give them better returns as well. So as a company, we're forward-thinking, and as a company, we're certainly growing in many different continents, and we think that just gives benefits to our clients and our employees, right? They want to be part of companies that are growing and expanding.
Nigel Green, good to talk to you. Thank you very much indeed.
Thank you.